Hey everyone, welcome back to the channel. As you guys know, and there's a lot of interest in Palantir, and as I mentioned on our IPO This Week episode yesterday, there's two big days for Palantir this week, so it's really a big week. The first one was reporting of their 2020 information, their financials, and so today I wanted to go through that. And what I'll do is I'll reference two pieces of information that Palantir put out. One was their presentation that they went over today, and the second is the actual release for the financial numbers, and we have those on there. So I'll cover those, and throughout the video or the presentation, I'll sort of share my own thoughts of what I was seeing and thinking about. And at the end of the video, we'll talk a little bit about plans for the rest of the week, as we know we have the lockups coming up next. So you can see this is a PDF file from the presentation for today. I will post a link to this so you guys can check it out. So before they actually went through this presentation, Alex Karp introduced it, and you know, this guy's as cool as ever. He's trekking through the snow. He's got the hair thing going, which I can't pull off. That's why I have a hat on today. But anyway, that's just something you won't see in the presentation. And you know, I know a lot of people really like the guy, and he came across pretty cool in the presentation. So anyways, looking at the business update, again, we're going to go through these slides quick, and I'm going to edit the heck out of this so this video isn't too long. But just scrolling through, I'm not going to cover every single page here because a lot of it is fluff. So this is the first slide that talks about some actual numbers. And the big thing here is that you see 47% of revenue growth happened in 2020. They also talk about the adjusted operating margin, which again is accounting, how they adjust it. And then you have 21 deals that were signed in Q4, each worth $5 million or more, 12 of which were worth $10 million or more. I'm going to talk a little bit more about the customers and deals as we work through this. One of the things that they talked a little bit about at the very beginning was which we had a video about, was about the partnership with IBM. And again, one of the big things they talked about on the call was that the IBM's 2,500 person sales force, which you see here, is actually bigger than Palantir as far as everything they have there. So what I would have liked to hear or heard more was what they think they can do with this partnership. They really didn't go there, and that was something that's just been a question of mine. So, well, I still think it's a really good thing, because it's going to help get their reach out. It just would have been nice to get an idea of what this partnership can actually bring us from a return on investment perspective. So this slide talks about the commercial side of the business, or the foundry business, and you can see on the slide it says in 2020 they generated 107% revenue growth from their U.S. commercial customers. And then they talked about signing some deals, and there's actually some more we've talked about most of these already. But what you can see here is that their total revenue, the enterprise side or the foundry side, is 44% of the total revenue. We've talked, or I've talked about many times about where I'd like to see that side grow to be a higher percentage. It doesn't have to be, but to me that's the sign that this company is going to grow big time. So not bad numbers, not at all. Just saying this is where we're sort of starting from, the first fiscal year as a public company, and let's see where the ratio goes going forward. We talked about some of these contracts, the Rio Tinto contract, again, no detail on revenue, which we've talked about before. The Pacific and Gas, the PG&E, again, talks about that. We mentioned that in another video. Talked about a significant expansion with a Fortune 50 healthcare company, and I don't typically try to say what that is when there's nothing official about it. Palantir, and again, there's a lot of understanding why they're not always forthcoming with every detailed thing that they do, and I completely get that, but I don't make the thing. I have heard what it could be, but anyways, it's on this slide. Again, you can go through there. And then we've talked about BP on another video. They talked again about the enhancement of their relationship. They talked about being a 9-digit deal, so that sounds pretty significant, but again, no specifics on that. So again, another expansion of work with a Fortune 200 company. This has to do with the pandemic. That's sort of where they talked a little bit about their enterprise or the foundry business. And then you have Gotham. And we've talked, about this as well. The government side of the business is, so of their total revenue, this is 56%, which came out $610 million for 2020. They talked about their growth rate from their government customers was 77%. And again, they talked about some of the deals and enhancements that they've had. And again, we'll just sort of scroll through this quickly. The Vantage program with the Army, we have a specific video on that. The pretty publicized deal with the NHS in England about the vaccine program, that's been out there, so they've talked a little bit about that. And then you have the deal with the FDA, which is a 3-year, $44 million deal, so you always like when they give you the numbers. And then in quarter four, they talked about they closed a number of large deals across the commercial and government segments. So again, we know that. And we mentioned a little bit at the top, the 21 deals signed in quarter four. Now, what I feel what was missing in this presentation was that idea of how many net customers gained through the year. Going back to the direct listing and the S1 filings, we know there was about 125 customers that they had. So obviously, companies get customers and they lose. Would have liked to see how many new customers they actually had. Didn't get a net number, and that's something I would have liked to see. Now, one of the things that was really good is that their existing top 20 customers spent more in 2020, but the really good thing is that their customer concentration actually went down as a percentage of their revenue. So again, that sort of can insulate them. You lose one big contract, it may not be as bad, if you're just so concentrated. And we talked about the top 3 customers during the direct listing of how significant they were. So anytime you can spread out your revenue, again, you're basically protecting yourself. It's reducing some risk. So talking about their pipeline and the new customers, they talk about the new customers acquired in 2020 generated $42 million in revenue. So going back to give you an idea of something to consider, when you do the number, the total revenue came to about $1.1 billion, which was ahead of the estimate that had been revised at the end of the quarter 3, which we were talking about 1.072. It actually came to just under 1.1 billion, so it was up. But when you're talking about that new revenue of $42 million, you're talking about only 3.8% of their total revenue. So while there was growth, and you want to take the growth, it may not have been an explosive growth that a lot of people expected to see. So this slide just tells you a little bit more about the number of customers generating 1 million or over 5 million or over $10 million in revenue. Again, just gives you percentages, so it's helpful, but doesn't give you those exact number counts. They talk about only the beginning. So their customers include 8 of the Fortune 100, 12 of the Global 100, or 24 of the Global 300. So this is a glass half full, glass half empty thing. Would you like to see them have more of those big companies? You would. And consider that they have a lot of big contracts, you might expect it a little bit higher. But the other side, that gives them an opportunity. So out of the Fortune 100 companies, if you have 8 of them, that means there's 92 available you can hopefully try to get in on. So again, glass half full, glass half empty, however you want to look at it. Some opportunity still there. So the second portion of the presentation was on the financials. And at the end of the presentation, we'll actually go through the numbers from their release. So again, we talked about the total revenue for 2020, which was over 1.093, so we're going to round to $1.1 billion. A big growth from 47% from 2019. That's pretty significant. And, I really felt that the revenue numbers were going to be good. I just had that feeling. Again, you're going into a direct listing. You have these locked up shares. I just felt like they planned this very well so that they were going to be able to report good revenue, and they did. And you're also talking about a 18-year-old company. To grow 47% in 1 year by your 18th year is pretty good. Some people probably want to see these 100% year-over-year revenue growth. That's probably something you can't really expect from an older company. One that's 2 or 3 years old, yes. But Palantir is not that company, so your expectations have to be what it is. 47% is pretty good. And then in this slide, just an average revenue per customer increased by 41% for 2020. You like seeing that more revenue going up per customer, but you're getting that more spread out in the concentration, so really strong there. So this slide just shows, and you can look at the quarter, which is always important, but sometimes I like to look at the full year, and you can see that their gross margins, whether it's adjusted or contribution margins, which are just accounting measures, have improved. So that's again showing more efficiency. So we like seeing that. The adjusting operating income. So this is not the total overall net, but this is just giving you an idea what the actual operating income was. And you can see from 2019, which was at a loss, it jumped up to $190 million. When we get back to the net numbers, you will see we're still at a loss, but for an operation perspective, we're actually in the positive now, which is good. And then the presentation finishes up with the outlook, which is always something that people look at, especially as investors. We're always looking to the long term. Alex Karp mentioned in the presentation that they do expect to have 30% growth year over year for the next 5 years. And again, trying to get to over $4 billion, as you can see on this slide. They're expecting revenue growth in the excess of 30% for the year for 2021. Revenue growth of 45% for quarter one. So we're going to come back to that because there's a lot of belief that this is why the stock was trading lower today, was that the expectations were that revenue was going to grow by 35% or more. And again, that number doesn't say that. It says excess of. So something to consider is why, as we try to figure out why did the stock perhaps start trading lower? What was the reaction to the earnings? Not so great. Okay, switching over to the release that they put out, and again, for lack of repeating here, just lists I will link as well. And again, it just talks about some of the numbers we already mentioned, so we're not going to go through all of this again. But we will do is go look at the numbers. And so this is your typical financial chart that we always do when we do an IPO, when we're looking at the growth of the company. So the first two columns, so you can see they're looking at the last 3 months of the year. So you're comparing 2020, the last 3 months of 2020 to 2019, so you can get more of a recent year-over-year change. And then the full years for 2020 and the full year 2019. I have to admit that for myself, I like looking at the full year numbers because, in quarters you can sort of move things around a little bit more. Longer periods of times it's hard to make the financials work. But the 3 months, particularly at the end of this last quarter, gives us an idea of what's more recently happening. So we'll go through both of these. As you can see, revenue was up in both cases pretty significantly. We've talked about that. So I don't want to spend any more time there. I want to get to operating expenses. And one of the things that we've talked about in the past with Palantir, particularly I think before they came out, was the expenses that the company has on the sales and marketing side. So we can see that year over year it was up. The question is, how much is it up based on how the revenue growth is? So looking here, year over year we expected to have higher numbers. So for the total operating expenses, we saw they had $408 million of expenses in just the last 3 months of 2020 and over $1.9 billion for expenses in the full year. So we've talked about the revenue before. We now talk about the operating expenses. Now this is where there was likely a disappointment from people that are watching. So this is probably why the stock sold off a little bit this morning. The expectations were that for the last 3 quarters, that the company would have posted a 2-cent profit, instead showed an 8-cent net loss. However, looking from year to year though, from the 2019 last quarter, definitely declining. And on the other hand, when you're looking at the net loss for 2020 and 2019, you can see that the net loss went up, which probably is not something that we wanted to see. Again, let's just move forward through these. So other than the net losses, one of the other parts of the financials I want to talk about is the stock-based compensation number. So you can see at 2019, that number was $241 million, almost $242 million. And then by the end of 2020, you have $1.2 billion. And one of the things that has been a concern for me, and again, this is why I think the lockups are a consideration. They're not a be-all, end-all sort of thing. But when we think about this company and why it went public, when it went public, if you go back to the interview on the day the direct listing happened, one of the reasons Alex Karp said that the company wanted to go public was so that it could give its longtime employees, 17 years with the company, and access to the liquidity markets. And one of the things that had happened over the years is some of their bonuses and whatnot started to transition from a cash-based bonus up into stock or restricted stock units or not. And so over time, a lot of the employees have this money, and they really didn't have an opportunity to sell it, at least easily, because again, it was not a public company. And trading in the private markets is a little different, or a lot different than on the public markets. So one of the concerns I've always had with Palantir, and you guys know this if you've been following me, and again, it's not saying it's a bad company, but you have a lot of people that have these shares that have been holding on to them and really want to start, getting some cash from the years of work that they put in. And again, that was one of Alex Karp's big things of saying why the company decided to go public when it did. So when you think about that, they weren't looking to gain money or raise money. If they did, they would have went through a traditional IPO, and they didn't do that. They wanted to give access to their long-term employees to be able to start realizing some of their gains. So as we have the lockup coming, and I'm finally starting to hear people talking about it's February 19th. I've been saying it for a couple of weeks now. It's February 19th. It's the third day. You have to sort of watch what this stock is going to do, because there's no necessarily belief that every employee is going to sell all their shares. That's not the expectation. But we know there's about 80% of the shares out there. You're talking about $1.2 billion of employee compensation sitting out there. What's the percentage of people wanting to sell some of their shares, which probably, when you talk about what the relation to the cost of the shares are now, they got much cheaper. So they're going to be able to capture a pretty big profit from that. And you can't blame them. And so the question, of course, is always going to be, what's the percentage of people that do that? How much of their shares? And that's something that's hard to predict. But it's the challenge of investing in Palantir in the short term, and that's what I've talked about. So you can look at the company, 30% growth over 5 years for a company that's this old or advanced, in a company that continues to become more efficient. We'd like to see those expenses go down. So again, just going back to the expenses, okay? This is a company that, by going to using Apollo so that they're not that time intense operation of trying to get new customers and onboarding them, having this, very easily, you flip a switch on, it makes updates here or there. We want to start seeing those operating expenses go down. So that's one of the challenges that Palantir has had. And we want to see them become more efficient at it. The other thing, again, is you're dealing with this lockup. So long term, the company is going to be a solid company. I've said this many times. The question is going to be the valuation. And again, you can argue that, with this market, the low interest rates, whatnot. But you have to consider that there are these shares out there. I am not telling you to buy or sell because you're worried of the lockups. I'm just telling you it's something to consider. And in the short term, there's going to be some volatility. And we know that the stock has traded, at an intraday high of about $45 a couple of weeks ago. And today it was trading below 30 at the time I was recording this. That's a pretty significant drop. That doesn't mean that it's not going to go right back up. It's hard to predict, but you just want to consider these things. And the purpose of this channel has always been for me to share some thoughts with you, and share the numbers and the facts, and then you just consider all of that and you make the best decision for yourself. So with that, I hope you can do that. And so my plan for this week with Palantir is as we go to the lockup period, this is probably going to be Palantir week on the channel. We'll be talking more about them. I'll definitely do a video about how the company did on the lockup expiration. And depending on what happens going into it, I might get another video up for that as well. So we'll see how it goes. But anyways, this video, hopefully I can edit it down so it's not too long. But as always, I want to tell you guys how much I appreciate you checking in. And by all means, hope you liked the video. If you did, comment on it. What are your thoughts? Are you concerned about the lockups? Are you concerned about the financials? At the end of the day, I think the financials are solid. That's what I thought they would be. They beat their revenue. They had a bigger net loss than what was expected. That's a little disappointing. And then again, when you see that number of that compensation out there, that's where you have to have the concern with the lockups expiring. And at least that's what I think. If you think I'm wrong, let me know in the comments again. All right, guys, I'll be checking with you guys again real soon. Take care. Have a good rest of your day.